Billabong, I don't know if we're seeing the shares back online at a point in the session today. What are you seeing at the moment in terms of news?
Takeover speculation really surrounding Billabong, and that's probably why the shares are in a trading hold. And I guess when you see a stock like this, we've seen a tremendous fall in terms of share price, and it gets so low that it becomes a takeover target. We have a look at Billabong's share price, and I'll just bring up a 10-year chart for Billabong. This is what it looks like, and you can see the massive run down that we've seen in Billabong shares from 2007. In fact, in 2007, we saw the shares hitting a high of $17.95, so just under $18. And yesterday the shares closing at $1.85. So in the last few years we have seen the shares losing 90% in value. In fact, in just the last year we've seen the shares losing more than 70% in value. So some talk, the Australian Financial Review with an article that perhaps the takeover bid could come from TPG at a $3 price. That represents a 68% premium to the last traded price. We have a look at Billabong in terms of its valuation. It is looking extremely cheap. On FY13 earnings, it's trading at a PE ratio of 5.6 times. So looking very cheap, especially in comparison to the sector and the competitors as well. Of course, this speculation comes just one day before its first half results are due. Tomorrow the first half results are due, and the market is expecting to see a core EBITDA between $74 to $76 million. We know that it's been a difficult environment, the weather impacts in the US as well as in Australasia, and the December like-for-like sales in the US turned negative as well. So a difficult time for Billabong. It may make it a takeover target. That speculation really seeing the shares in a trading halt today. But if those reports of a $3 bid from TPG are true, then we can expect the shares to absolutely soar when they come online. Yeah,
they will be the one to watch if they come back online. That's all true. For today, we are watching a heap of company results. QR National is one of the ones you're across. What's the outlook for QR National, knowing that it's been quite hard to kind of get below all the numbers, given all the flooding problems, the fact they're trying to recover from that?
If we have a look at QR National, the first half profit coming down by 32%, and Brooke, as you mentioned, it is because of the flooding problems that we saw in Queensland. But if we have a look at the result, coming in ahead of expectations at $189 million, we were actually expecting to see a result of $161 million. And despite the impact of the Queensland floods, we saw revenue rising by 6%. But it does look like that coal tonnage volumes in Queensland still remain quite sluggish. So in terms of the full year forecast for coal volumes, expecting it to come in on the lower end of expectations, and guidance is between 200 to 210 million tonnes, so coming in closer to the 200 million tonne mark. If we have a look at the result for the full year, though, that's likely to be offset by some of the cost management initiatives that QR National is looking at the moment. If we have a look at QR National as a growth stock, we know that back in September it signed off on the Wiggins Island project, but really its growth is capped unless it looks at some more projects. And I guess the market is watching out for any signals that it's looking at possibly more growth projects to help the share price along in future years. And one of the possible projects is a fourth train in the Pilbara region, and that would help the likes of Atlas Iron as well as Brockman Resources and Hancock. So the market watching for some of these growth initiatives to help underpin the share price going forward. The result coming in slightly ahead of expectations, but the share price down by 0.5% today.
Julia, just finally, can you perhaps make some comments around Qantas, because that share price reaction is extremely impressive, 3.5%. They didn't kind of start off like that after we got the results, but as people seem to have been, I don't know, listening to that news conference, digging into the details, the shares shot up.
If we have a look at Qantas's profit result, well, we have seen a steep decline, but in terms of the core underlying pre-tax profit, actually coming in ahead of expectations today. In addition, we've heard of some more job cuts, around about 500 jobs. They are possibly looking at closing one or two of the heavy maintenance centres here in Australia. The jobs don't look like they're going offshore. It's more because of the new aircraft coming through from Airbus as well as from Boeing, which will require less maintenance. So the market really really liking the sound of some of its future initiatives. Of course, Qantas is a stock that has been absolutely battered. And I guess one of the problems with Qantas is the high Australian dollar. It's got a lot of its costs in Australian dollar terms in terms of the maintenance costs. And that has a heavy impact in terms of its underlying business. But of course, the last year has been an extremely difficult one. But Qantas coming in ahead of expectations in terms of this earnings result. The cost initiatives that it's announcing should help underpin our profit going forward. And the share price really having a positive reaction today, up by more than 3%. And that's in a market that's losing more than 1% at the moment.